Hello and welcome to the Cryptocurrency News channel. This is the technical analysis, chart analysis, and fundamental analysis for January 10th, 2022. Forgot I don't really do this stuff on Sundays, so we skipped today. Well, it's hard to say if Bitcoin's actually hit a bottom or not. We did have one really big wick down earlier today, but it's really hard to say whether that's actually a new bottom or not. As you can see, like the wick was very thin. I think there was one big liquidation on one exchange that actually pushed that down. I'm not really sure which exchange it was, but the main candle actually stopped around 40,500, while the wick actually went down to 39,500. So we actually spiked down 1,000 points, which is roughly about 1,000 points below our last bottom. But it did actually bounce back very quickly, and we quickly went back up to 41,700, which is, I believe, where we kind of are right now, 41,800. So it rebounded very quickly. If not for this bottom, like the last 24 hours would have actually been just as good or not, or better than the last 24 hours. But right now, because of this week, we still have some downward momentum. Now, like I said on Saturday, our last top was actually a little bit higher than where we have been for the last 5 days or so. You have to go all the way back until the 6th to get to a higher point. And I basically consider this area around the 7th to be our last drop that we never really rose up on. So once again, like the next area I'm actually hoping that we'll reach is around 43,000, 600, 43,500. If we actually can bounce back to that area before dropping down any lower, I think it is a decent signal that we've actually bottomed, and that we might actually be for a rebound. The issue is there have been tons and tons of liquidations. Long liquidations. In fact, since early January, liquidations of longs have overtaken liquidations of shorts by a factor of 2 to 1 or more. 69% have been longs liquidations, and only 31% have been short liquidations. The issue is, like, once these longs are actually getting liquidated, I think the same people are putting in like longs at lower prices, hoping for a sudden rebound like this to recover their cash. But most of the time, they're just getting these sell-offs, and they're just getting wrecked more. Now, for the market to come up, those guys need to stop longing so they can stop getting liquidated. But as long as there's human greed, there will be liquidations. So right now, before we had this spike down, the highest we were at 46,700. Not 46, 42,700, 42,800. Let's see if we can get above that first on this rebound. And the thing is, we still need about 3 or 4 days of not actually having a lower low to maybe start confirming, and then we need to start rising above 43,000 and then 44,000. If we can rise above the 43,500, that would be a big jump into confirming. And if we can rise above this higher point here of 46,800, that would be even higher as it is right now. As you can see, like, there's several steps down. The first one being 43,500, the second one being around 47,000 or so, and the third one way up here being around 52,000. So those are the steps, again, 3 steps that we should actually be looking for. The thing that concerns me is this giant downwick right here, because if you actually go from bottom to bottom now, I mean, you can still see that we are going down on the graph. Obviously, there's really nothing, holding that back, and you can still see a clear downtrend pattern. And we need the lows to actually become higher and not lower. Like I said, if it wasn't for this giant wick, we'd be doing okay, and I would say like we're slowly recovering. But because of this giant wick, the downward trend still continues. I mean, there's just not much to say. There's just not much indicating a bottom or an upward trend. It does actually depend on where like the current thing is, but right now it is still a downward trend no matter how much you look at it. However, I will say that the drops have been smaller and smaller, going back all the way until the end of around the end of December. The end of December, basically, you had a big drop here from 51 to maybe around 46, and then this one was a drop from like 46 to 42, which is a little bit smaller, and then of course this drop was from 43 to 41, which is much smaller, and then this drop is even smaller, only about 1,000 points, from about 41 to about 40, 41 to about 39. So each drop has been smaller, and substantially, we've actually held the $40,000 to $42,000 mark fairly well, besides that one wick. So we might actually be bottoming out at 40,000. But people keep re-upping their longs for some reason, believing they can actually get an eventual comeback. But those people are just getting wrecked over and over again, and they're going to get wrecked probably several times before they actually get that before they get that relief. I mean, they've already been wrecked several times. They just want to get wrecked more because they like getting wrecked, I guess. That's kind of the mentality of leverage traders. And leverage traders are really the only one, I think, really paying attention to the day-to-day movement of Bitcoin, because everyone else is actually in it for the longer term. The technical analysis numbers, right now we are actually oversold. The commodity channel index on the daily is negative, the stochastic is negative, and the RSI is hovering between neutral and negative. So the indicators would actually indicate buy. However, the average directional index is actually getting a little stronger at 37 now, so we could actually be showing a downtrend. And if it's a downtrend, regardless of what these indicators are, you don't want to buy until that trend starts reversing and the directional index starts to get weaker. By the way, the longer the period you're looking at, generally the weaker the directional index is. So on a daily basis, a directional index of 37 isn't completely all that weak. It's not super strong, but it's not all that weak. So the stochastics and the other oscillators actually say buy. However, the average directional index could actually give you an indication that a trend is actually forming. So it is kind of dangerous to buy now, trying to buy the swell. On the moving averages, the big thing to note is that the 50 EMA has actually crossed below the 200 EMA. So essentially, what we have is kind of like a death cross forming. However, the death cross may actually be a lagging indicator. So that's the problem with something like a death cross, that the last two times it happened, it didn't actually go down after it happened, it actually went down before it happened, and actually after it happened, it actually started to go back up. And that's the problem with death crosses and golden crosses. Unless you have a massive drop of 60, 70% or more, generally they'll take a couple of weeks or even a month or two to form, and when they actually form, they're already too late. So keep that in mind. The exponential moving average is generally lower than the simple moving average, plus we're basically below the exponential moving average for all of the daily indicators. So short-term wise, the moving averages say sell, and I would actually not buy unless you're really trying to come up on the upswing. I really wouldn't buy until we at least hit about 43,500 or so. So that's what I have to say about the daily. On the weekly, it's a little bit better, but the commodity channel index is still saying buy. The average directional index is still very, very weak on the weekly, so there's no clear trend. The stochastic is looking at buy. So I'm actually kind of looking at a buy rating on the oscillators for the weekly, because both the commodity channel index and the stochastic are buy, and the average directional index on the week is very weak. So weekly wise, maybe into next week, it might actually be oversold, and we might actually have somewhat of a bump up on the oscillators. On the moving averages, obviously we are all on sell because we've dumped so much this week, and you have to go way down to the 100 moving average on the week to actually get a buy, and I think that's a little too far. I prefer to look at the 20 and the 30 because I do believe that we're in shorter 6-month cycles now. Looking at the 100 or the 50 is not really all that good of an indicator to me, because 2 and 3 years, obviously if you're on a 6-month cycle, it doesn't work nearly as well. On the monthly, over the 1 month, you're going to see more sell, obviously, and this will probably be true unless we can actually surge above 45,000 or 46,000 within the next couple of days or weeks. And really, we need to see a little bit of a turnaround in the market. Obviously, the oscillators are pretty much all neutral on the month, because if you look at the longer term on the trend on the month, it's still all buy. So unless we fall to the mid 30,000s or below, the monthly is going to remain pretty solid buy. But I really only look at the 10 month because that's almost a year already. And looking back any further than that, it's because I believe in the 6 month cycle at this point. It's not really all that relevant. So monthly, it's still, I think, a decently good buy. If you're willing to wait out the next maybe month or two, it's still a very, very good buy on the monthly. On the daily, I would hold back. On the weekly, it's a it's a very hard decision. I would still, above all, I would still wait for like 43,500 before I start buying. But it's really based on your risk quotient. I'm not really interested in buying on the minute or the hour and leveraging to get maybe that relief pump. I don't really know when that's happening or coming, and it's very hard to tell when that's actually coming. So that's kind of what I have for you right now. We do have some more people buying in, like Bill Miller has like 50% of his wealth in Bitcoin. We have other institutions starting to move in. MicroStrategy is continuing to buy. I'm not really sure if El Salvador bought the dip or not. I'm pretty sure they did, but I wouldn't be so sure. But the TAs right now look kind of shaky, and they look extremely dangerous because of the wick all of a sudden down until we get above about $43,500. 43.5 would be a good confirmation. And then the next one, definitely more of a bull market if we get to around the 48,000 area, and definitely a reversal if we can get to around 52. So that's where we are right now on the TA. Like and subscribe, hit that bell notifications button, and I will see you guys next time.